Welcome to CurrencyChange Daily Market Update on Thursday, 29th of August 2013. My name is Laurent Guilbaud. I'm Managing Director of CurrencyChange. In the US, President Obama and UK Prime Minister Cameron confront a decision whether to attack Syria without a United Nations mandate to meet Russian resistance. Obama said in an interview aired last night that while the US has concluded the Syrian government was responsible for a chemical weapons attack against civilians on August the 21st, he hasn't decided on a course of action. Any military strike on Syria may still be days away, in part because the team of United Nations weapons inspector needs at least 2 more days to complete its report, and due to the fact that members of the US Congress don't return from a recess until September 9th. The US dollar managed to gain some safe haven support yesterday from the weakness in global risk assets, even though on the day equities actually moved again higher, so positive correlation between US dollar and equities. Pending sales of existing homes in the US fell in July for the second straight month, the latest sign that higher mortgage rates are starting to drag down the housing recovery. The second estimate of US Q2 GDP is released today. An upward revision is largely expected based primarily on June trade data. In Europe, German unemployment will provide more information on the state of the Eurozone, with the market continuing to expect broad improvement in the data. German Finance Minister Schäuble said 11 billion euro might be a Greek aid project. In the UK yesterday, a key event was the first speech from the head of the Bank of England, Mark Carney, who told business leaders in Nottingham that longer-term market interest rates are certainly relevant, but what matters most to you as an individual or business is actually what happens to short-term Bank of England rate, now and in the future. He said that because rates on 70% of loans to households and more than 50% of loans to businesses are linked to the Bank of England benchmark. Carney introduced forward guidance on August 7 and said the Bank of England plans to keep its benchmark at a record low of 0.5% at least until unemployment falls to 7%, which it doesn't see happening for another 3 years. UK unemployment is presently at 7.8% in the second quarter, and the MPC doesn't see it reaching the threshold until the end of 2016. Mark Carney also said that officials are ready to add stimulus if investors' expectation for higher interest rate undermines the recovery. Live exchange rates on sterling dollar were at 155.15, on sterling euro 116.90, sterling Aussie dollar 173.25, and sterling New Zealand 198.85. Sterling moved higher during Carney's speech yesterday, following less dovish than expected talk. So, in terms of economic agenda for today, we have at UK time at 9 o'clock the Eurozone German unemployment rate expected at 6.8%. At 1 o'clock the CPI for Germany expected at 1.7%. At 1:30 for the US, second release of Q2 GDP expected at 1.3. And at 1:30 weekly initial jobless claim is expected at 329K. If you require further information, visit CurrencyChange.com or contact us on +44 027 373 2686.